Lyft shares spiking after hours. This is a company that's been going through layoffs. They just laid off 17% of the workforce, and certainly ridership has been crushed. Why are investors so excited about this?
Well, I think, at this point, I think investors kind of think that maybe the worst is kind of now baked into the stock. I mean, you kind of look at Q1 results, and they were pretty phenomenal, I'd say, on a relative basis here. And, to be honest with you, if you kind of look at how they were performing right before the pandemic hit, it's really unfortunate that they kind of have to deal with this, because they probably would have kind of achieved, EBITDA profitability much sooner than most would have anticipated. Now, that being said, when we kind of start looking at the numbers here in April, rides down about 75%. Looks like it bottomed in mid-April, but you still look at the numbers here over the last week, rides down about 70% year over year. I think the concern now is what kind of recovery are we going to get here over the next couple of quarters. We tend to be a lot less bullish than most out there. And as a result, I'd expect to continue to see some significant cash burn here in Q2 as well as into the second half of the year.
Meantime, Uber also announcing it's laying off 14% of its workforce, but in CEO Dara Khosrowshahi's memo, it certainly sounded like there was more to come there. How do you compare Lyft's position Lyft's resiliency to Uber, given that Uber is a much larger company, but also much more exposed?
Yeah, so, when we kind of look at, first off, we kind of look at the first quarter results here, I'd expect Uber's results to show a lot more of kind of the pain than what you saw out of Lyft here in Q1. But that being said, I think Uber is much better positioned here because of that scale, because of that, that diversification across different markets, as well as the fact that they have a lot more meat that they can cut out of the business, and thus kind of, improve on the margin side of things more so, we think, than Lyft can. Also, at the end of the day, when you kind of look at these type of downturns in different areas of the markets, typically market share leaders often come out much better positioned than others. And because of that, we do think Uber long-term has the potential to really kind of capitalize and take some share as they kind of exit this downturn over time.
So let's talk a little bit about a problem that both of these companies are facing. California sued Lyft and Uber this week for not complying with a law that states that even contractors are entitled to certain benefits. This has been sort of a dark cloud looming over both of these companies. How big a deal is this?
No, we think it's a huge deal. So, if you kind of look at the regulatory side of things for the ride-sharing market, it's going to be a dark cloud that's going to hang over these companies for a very long time. As far as the AB5 law that kind of went into effect as of January, it almost kind of, looks like both, Uber, Lyft, as well as DoorDash kind of, ignored a lot of kind of, what was coming from the government there. And, they may have to pay the price on this, but, clearly they're looking for moves here, looking for a potential carve-out going into 2021. Whether or not that's, actually obtained, we'll wait and see. But in the meantime, this is definitely a dark cloud on their end and something that needs to be addressed.
Let's talk a little bit about Uber, talking about them being more exposed. Obviously, they've got Uber Eats. They're also reportedly planning another investment in a scooter company, Lime, which is a company that has really been struggling. Do you think Uber should be placing these kind of bets right now, especially when we're in the middle of so much uncertainty?
Yeah, I actually think an acquisition of acquiring assets via Lime or what have you is would actually be great for a great asset for them on their end, especially kind of given what's going on amid the pandemic. But you kind of look at Uber here. You look at the balance sheet. It's an unbelievable balance sheet. They also have access to capital markets if necessary. There are a lot of believers in the stock here. We see very little risk of this company kind of having long-term issues, to be honest with you. So oftentimes times like this are actually a great time to kind of start making some bets. So as far as Uber is concerned, and we actually expect to see some great numbers on the Eats side of things, which probably ends up holding, the potential, the fundamentals of the company up here in Q2 maybe better than some may anticipate. But, when all is said and done, the diversification of this company, I think, will kind of really show and allow this company to kind of navigate the storm very well. So we have no issues on those type of moves at all.